Yeah, fine. We will go in a couple of minutes. We are live right now.
Sure.
Good morning, viewers. Today we have Mr. Sudhir with us. He is from Aditya Birla Sun Life Mutual Fund. He is heading the operations for Birla Mutual Fund's International Financial Services Center in the GIFT City in Gujarat. He has over 23 years of experience in the mutual fund industry. He is with the fund house since 2007 for the last 17 years. He is a postgraduate holding MBA from University of Mysore. Aditya Birla Sun Life Mutual Fund has recently opened a US dollar investment product which will be useful for NRIs, overseas citizens of India, and foreigners looking for dollar-denominated investments in India. We will discuss with Sudhir about IFSC, GIFT City, advantages of dollar-denominated investments for NRIs and OCIs and foreigners, and in particular about Birla's current offering. Today, Aditya Birla Mutual Fund manages more than 3,83,000 crores of assets. With that, welcome Sudhir to our channel. Namaste. Good
Thank you, sir. Namaste. Welcome.
Yeah.
Thank you. Thank you for giving me this opportunity to connect with all your investors and to be present our offerings and also introduce the GIFT City to the wider investor base across India and beyond India. It's really a great initiative from you to introduce this GIFT City and IFSC to the wider audience, which is actually upcoming and which is growing very well. And it's a new destination for India. So hence it makes it very relevant to be there. And thank you for giving me this opportunity.
Thank you. Thank you. It's so nice of you. I always used to wonder, a small petty country like Singapore can attract so many thousands of investors from all over the world. Why not a big country like India? I used to wonder because people always ask me, can I invest in dollar in India? Where it is fully convertible, all those things, a lot of questions come. So now, now it is the time for India. Anyway, with that, lot of our subscribers here, this currently going live in YouTube, and after post that it will be on a recorded session, the live session in YouTube as well. So many of the viewers do not have an idea about GIFT City or IFSC, which is International Financial Services Center that has come up in Gujarat in the recent past.
Yeah.
So if you can give some introduction in a very simple language, a layman's language, it would be great, Sudhir.
Sure. So GIFT City is an brainchild of our Prime Minister, Mr. Narendra Modi ji. It all started after he getting elected in the year 2014. So in the year 2015, they introduced this concept of establishing GIFT City and an IFSC in the budget in 2015. So further to that, they have to make certain changes in the SEZ Act, because when you're creating an IFSC, which has to have certain benefits for investors to be coming in, historically that we have the SEZs where they provide lots of through SEZs.
Like I think even in Chennai they have a special economic zone where they can produce and export without taxes and all those things.
Absolutely. So historically in India, SEZs are being mainly offered for manufacturing organizations. Across India, we have SEZs, so which is basically catered to that only manufacturing entities. So through now that they will have to make changes to the SEZ Act so that they can provide the financial services business also can operate in SEZ. So hence it started off with that in 2015 by making passing a bill in 2000 in the budget, then making a changes in the SEZ Act, and then started developing that entire GIFT City. So GIFT City is overall about 886 acres of land, which are earmarked for as a smart city. It is the India's first operational smart city. So, which has two parts into that gift city. One is that called domestic tariff area, which is comprising of about 625 acres. Then another part is called IFSC, which comprises of 261 acres. So in a domestic tariff area of that 625 acres, there is a multiple services providing entities can be operated. Like you have a normal commercial buildings where any corporate can set up their offices. Then we have hotels. Then we have an educational institution. Then we have a hospital. Then we also have a residential apartments which is coming up. So it is like historically the way that smart city has been dreamt in our country, where walk to work and all facilities are been nearby in the nearby and well connected infrastructure. So that they have made it happen in Gujarat, in between this Ahmedabad and Gandhinagar as a gift city. So historically, we all know that Gandhinagar and Ahmedabad are twin cities, which is just about 35 kilometers apart. And now that this smart city has created, there is a tri-city in Ahmedabad. In between Ahmedabad and Gandhinagar, there is one more gift city has evolved in the vicinity of about 625 acres. This also can be further extended by another 2,000 acres. The land has been earmarked. So currently, all the DTA part has been well established and started off business. The IFSC part is what is called a SEZ. That's only this IFSC comes under the SEZ thing, which has got a specific benefits. So that means any company which sets up a business in this IFSC.
What is the IFSC abbreviation?
International Financial Service Center. So historically, we have these international financial centers outside India. So you have Mauritius, Dubai has got a DFC, Dubai International Financial Center. Then we have Ireland, Luxembourg, US, and even in Singapore, there is international financial service centers where the countries could establish their offices there and do multi-country businesses. So whereas in India, we didn't had that, IFSC support. So it is again the vision of our central government and our Prime Minister, Mr. Narendra Modi ji, to tell that. So they have established the gift SEZ, this IFSC has been established to realize the vision of Government of India to emerge as a major economic power by attracting financial transactions into India. Historically, as India is becoming a larger and larger economic power, but still most of the financial transactions used to happen outside India. If any Indian corporate wants to borrow money in dollar denomination or in any foreign currencies, that has to go outside India and look out for sourcing funds. So then if India has been major buyer of aeroplanes, flight, right? Today to buy that thing, to execute those deals, they have to go to Luxembourg or Ireland or some other places to do that, to do those transactions. So there are many people, and again, as India is growing much faster than the many other global economies, there is a huge amount of investments, which the interest, which has evolved across the world. And the people who wants to invest in India wants to go through various other, jurisdictions like either Mauritius or Cayman or Luxembourg, where the fund is set up, and from there they were supposed to invest in India. So now the Prime Minister wanted all these financial transactions to happen in India, within the India, but again, they also call it as a gateway for financial transactions. So that means whatever has to go out can go through this gift city, and whatever has to come inside can also come through this gift city route. So hence, this IFSC has been set up in India to ensure that all these financial transactions between countries can, going forward with India and any foreign location, can happen from gift city route.
So the laws in this part, in this 200 acres, 250 acres international financial services, law of India does not apply, if I am right.
Law of India applies, but the regulator is a unified regulator, because it comes under that. It is only from a FEMA perspective, it is an international jurisdiction. But for all that regulatory perspective, it is regulated by Indian entities. So historically, when they started this gift city, this IFSC concept, we used to have the SEBI regulating capital market. IRDA regulating insurance business, RBI regulating other financial services or the banking business. Then in the year 2019, the government again made the changes to the SEZ Act and again brought in an IFSCA, that is International Financial Service Center Authority, as a regulator. So now in 2020, they have by passing a regulation, IFSCA Act, they have made IFSCA as a unified regulator. So all the powers of RBI, SEBI, IRDA, PFRDA has been delegated to IFSCA, and IFSCA has given the full powers to develop and regulate the IFSC businesses here.
Okay.
So there are wide range of services, or the companies which provides wide range of services can set up their business in India. To start with banking, so we have almost all the PSU, private sector, and foreign banks have set up an office here in IFSC. It is called International Banking Units. Then we have insurance companies, both life insurance, general insurance, and set up an offices here, and they not only take insurance businesses from here, they also do lots of this reinsurance business from GIFT City. Then capital market. So people can raise money, can list. We have two stock exchanges here. Both BSE and NSE has opened up their offices here. The people can do listing of their stocks here. Trading is happening, in the derivatives of single stocks as well as in the indexes here. And then we have a leasing and financing, basically the aircraft leasing, ship leasing, which all used to happen outside India. Now it all can happen. So already we had I think Indigo has executed one transactions, in India. Then fintech and techfin companies. So the fintech companies, now today that all those companies who are setting up that online platforms for investments, for various things, they can also set up offices here. Then we have funds, alternative investment funds. So which used to be like, we have, that in domestic market, we have a huge number of alternative investment funds. And we have that, there would be many India dedicated funds were there earlier in Mauritius, Cayman, and other locations. Mm-hmm. Now all those funds can also be set up here in GIFT IFSC. For the first time in India, foreign universities are allowed to set up a campus here in GIFT City. Historically, across India, you don't have any permission for any foreign universities to set up shop set up campus in
directly.
Yeah. They always to come through some as an joining hands with one or the other universities. But whereas here they can have their own direct campus here in India and onboard students. And then there is ancillary services which have been there, like all the fund admin team, that R&Ts, advisories, chartered accountants opens their office for various advisory services like PwC, KPMG, everyone is there. So all that other service providers are also present in GIFT IFSC now.
Okay, very good. The thing is, so now can I say that people, the Indian corporates or Indian individuals who are going to Dubai, who are going to Singapore and Luxembourg, all those places, now they will go to Gujarat.
Yes, absolutely right.
GIFT City. And in turn, probably this might be a competition to countries like Singapore, Luxembourg, because they will have reduced business.
Absolutely. We already seen in the last 2 months, the DIFC has done a couple of roadshows in Mumbai, because our GIFT IFSC people are going and doing roadshows across the world. They are going to every country and talking to their people there, that this is an opportunity, you come and open your office here. So now that looking at that, yes, many people have started coming to India also, that we will also give you certain benefits. You come and set up a fund in our locations. So, yes.
And and so you mentioned all these things, the modified act, SEZ Act, for which IFSC came. This started in 2020.
Yes,
it was
2019 they made an act, and 2020 the IFSC has been established with all the privileges, and from there on now every rules and regulations are drafted by IFSCA, and all developmental activities is taken by IFSCA.
Very good. Now there are a lot of individuals, around 60 people are watching right now, and many more will watch in the future. So for an individual, what are the advantages of investing? Say like NRIs, let us assume. Can Indian citizens invest here?
Yes, sir. See, as I mentioned that this is a gateway for all the financial transactions. There is two types of fund investments can be made. One is that the resident Indians who wants to invest outside India. Now, the earlier we had a schemes from mutual funds who are allowed to invest outside India. There is a limits of $7 billion for active funds and $1 billion for ETFs. That limit is now full. So unless otherwise the RBI or the government opens up that limit, now that we are not able to make any investments outside India. So now, but whereas those such limits are not there in Gift City, is not applicable to Gift City. So hence, the resident Indians, if they want to take the money out under liberalized remittance scheme and invest abroad, or they have already taken the money out in and holding the money in dollar denomination or any foreign currency denominations, and wants to invest, then you have an opportunity through Gift City, because we have set up certain funds which invest in global markets, which set up in emerging markets, which invest in global markets. So these funds are available for the resident Indians and as well as corporates to invest. So for resident investors, you are aware that $250,000 is the limit set by RBI to take the money out per year per person, including minors. Whereas our limits for corporates and LLPs are to the tune of 50% of their net worth. So this money they can take out. So there are many ultra HNIs are taking the money out and accumulating them for their various requirements, like their education, holiday, health requirements, or acquiring assets for a period of time. For all this, they are already taking the money out. So this provides an opportunity for them to but once you take the money out, you cannot hold it in a deposits. You can hold the money only for 180 days in a deposits. After that, either you have to utilize the money funds or you have to invest somewhere. So hence, if you want to build a corpus, in foreign currency, these investments acts as an good opportunity for you to not only invest and also grow your money through and explore the investment opportunities beyond India.
Okay, good. And what are the advantages for NRIs? Now, for NRIs and overseas citizens of India who want to invest in India, because resident citizens can invest outside of India, as you say, through the Gift City, but not inside India.
Right.
So, whereas NRIs and OCIs, they want to invest in India, or even foreigners, they want to invest in India. What are the advantages for them by investing through the IFSC?
Yes, sir. Sir, first and foremost thing is that if you look at that India, for any investor to invest in India, PAN number is a mandatory. Otherwise, they cannot complete the KYC, right? So many new gen NRIs or foreign nationals doesn't possess this PAN. So hence they all are deprived of investing into India market. Though they know that it is a very attractive investment opportunity, but because of not having a PAN, they are missing out on investments. Whereas the investment opportunity through Gift City, where here in the regulations doesn't mandatorily ask for PAN card. So it's not a mandatory document. So hence it itself acts as an enabler for many new gen NRIs or even foreign nationals who to invest in India. Okay, so that's a one big opportunity. And second thing comes is that they don't need to file any tax returns or anything or pay tax here. Okay. So whatever be that's all that whatever the gains which goes to them, they pay the tax as per their tax residency. So though when they're investing in India directly, there are tax treaties available between India and various countries, and different treaties are there. They have to provide various documents to ensure that either the tax deduction happens at a lower level or no deduction happens. But whereas here, there is no such documentation is required, so it makes it more convenient. So since we don't deduct any tax at source, it is all the tax, whatever they have to pay is as per their tax residency. If there is no tax on the income capital gains, then there is no tax which they have to pay at all. So hence, many countries worldwide doesn't put tax on the capital gains. So that really provides many, and here whatever the gains which goes to the investor mostly goes as a capital gains, and hence that most of these investors would be probably gets benefited through a lower tax or a no tax kind of an on the income generated through here. So when the investor also can invest through two routes in Indian markets via GIFT City also. One is that we do an feeder funds for Indian mutual fund schemes. Okay. So, and another thing is that it's a fund where you directly buy the stocks.
Oh, okay.
So both the routes are available. So when you have a feeder fund route, it's most tax efficient because neither at the mutual fund route there is any tax deduction at source, nor at my fund level there is no any tax deduction at source which happens. So neither when we invest from from GIFT City to India, we have to again register with SEBI as a class 1 FPI for the foreign portfolio investors, because for all the FMR things we are a foreign portfolio investors. So hence we register there also at the FPI level also there is no tax incurred when we are doing a feeder fund into mutual fund schemes.
Okay.
Okay. So when the same thing when in a fund here invest into stocks directly, so they also have to register with SEBI as an FPI and then invest. So there at the FPI level there is a taxation applicable for them, which is similar to that of equity taxation, that is 12.5%. For a holding period of 1 year and 20% for more than 1 year. It happens at the FPI level at that, but whatever the income which there is no TDS or any other deduction which has been made on the other gains, which would be given to the investors.
Okay, okay. So I say like if a person from Dubai, for example, or any of those Gulf countries which does not tax the resident, so if they invest through GIFT City IFSC through your fund, probably they will not pay tax in India. They need not pay for the
Yes.
profit that arises. At the same time, in their own country, it is not applicable, so they need not pay.
Absolutely right.
So as you rightly said, many of the Gulf countries, if I'm right, I think Singapore also does not charge on capital gains.
Absolutely right.
So, some of these countries, NRIs who are there, they can invest through this. This is a very better product for them. And also, one more thing is, they bring in dollars and they take back in dollars.
Yeah, they don't do that any conversions of into INR.
Okay. So that way also that is, easy for them. The next question arises, is everything tax free in the GIFT City or IFSC?
No, it is actually, yeah. See, it is more made as a tax neutral. See, particularly if someone is investing in India in a government security in a corporate bonds, the interest is taxed. If they're investing in shares, the dividend is taxed. So, but whereas when you are doing it in GIFT City, if you're putting in a deposit in a bank here, then it is not taxed. So there's where you do the transaction, it also defines from another perspective. So, but however, that's most of these gains are all it is not taxed in India. Okay, they have been given an exemptions there. But for a resident Indian who invests through GIFT City outside India, again, there his gains are taxed as per India laws because he's a part of India. So that in like the way any NRI from an US, if he investing in through GIFT City into mutual funds, he has to pay the tax in US, though he might not pay the tax in GIFT City or in India, but he has to pay the tax in there. Same way that Indian people investing through GIFT City in US or in Canada or in Hong Kong or anywhere, but when the money gain comes back to them, they have to pay the tax on those gains
in their own country.
Yes.
Yeah, I understand. And for US Canada investors particularly, there is some restriction with some fund houses that they have to be present while investing. Some fund houses in India do accept directly, but some fund houses they need physical signature. So that kind of restriction is not there in GIFT City. You can accept from any country. Am I right?
Yes, we can accept, sir.
Okay. Irrespective of the country, you can. So when did you start operations, as Birla Fund House? When did you start operations, in GIFT City IFSC?
We have set up our office here in 2022 here. And that was an initial formation days of IFSC also. So where we have started and we have first launched one fund which is investing outside India. It's called Global Emerging Market Equity Fund. So we were operational in 2023. That basically it's again, we have done it as a feeder fund. So where we mobilize the money from India, we invest into another fund, which is in Ireland. So that in turn, again, invest across the emerging markets in equities. So we have an investment manager called Arga Investment Managers, who is in boutique fund management team. But again, they have a very large experience. The founders have been working with Citi and many other large, asset management companies for over 30 years. So they had set up this fund about 10 years back. We found that emerging markets have been quite attractive for India investors also, because generally the emerging markets are all high growth markets. The GDP growth are much higher than the developed markets, and thereby the returns generated by the capital markets of these emerging markets are also quite high in compared to the others. And we saw that the market opportunities, particularly the portfolio, the way that they have been approaching to stock picking, which is completely value oriented, value approach, and the portfolio wants was very attractive. So they were looking at about 8.5-9 times of PE, when most of the developed and other markets are much higher in terms of PE. The return on equity has been about 13 to 14%. So we saw that it has been very attractive, and we chosen to go with them. So we have funded them. They also had a 10-year of track record in managing these emerging markets. They basically, and again, cater to large institutional investors and family offices across India. So they were managing about $8.5 billion of money in that fund, and across only about 120-130 investors. So many funds also been doing, and like the way we are doing as a fund of fund, many funds like Vanguard Fund or many other funds are also been doing a fund of fund on that. So that is a kind of credibility which they had, so which we had gone with them.
So you started with in 2022 in IFSC.
Yeah, 22 in IFSC. We launched one fund in 2023. Then we launched one more fund in 2024, and now we are launching two funds in this month, just this week. One is this FlexiCap fund, and another is that we have done a global blue chip equity fund on the outbound fund. So who wants to invest outside? Global India FlexiCap fund is for NRIs and foreign nationals, foreign entities who wants to invest in India. Whereas Global Blue Chip Fund is an fund which for the Indian investors, we also take money from NRIs also in that fund for who wants to invest outside India.
Outside India. Okay. But now, and this your operation comes under Birla Sun Life, Aditya Birla Sun Life AMC. Am I right?
Right, sir. Yeah.
So you are a part of the Birla.
Yeah. So here, as per the IFSC regulation, any India companies can set up the business in three forms. One is that either as a branch office or as a subsidiary. So we have now set up here as an IFSC branch. So it is a branch of Aditya Birla Sun Life AMC.
Okay, very good. Like you, how many fund houses? In India, around 40-45 fund houses are there. How many of them are set up in offices in IFSC? Approx?
I think already maybe 10-12 AMCs would have already been registered there.
Okay.
And I think every month there is new people would want to set up and come here. See, basically because many of these funds already had some international operations, which used to be maybe based out of Cayman or Mauritius or something like Ireland or something.
I see.
So it was not new. International business was not new to them. So what made them easier is that now instead of managing these funds outside India, you start managing that from India. So there are two things which was beneficial for many of these funds are all that place of effective management. Though you have a fund in outside India, but if the management is happening here, then because of the place of effective management is India, then the taxation will undergo change as per the Income Tax Act. So hence most people, there was lots of confusion used to be there, lots of disputes used to be there between income tax and other. So hence at the moment this opportunity came up, I think most funds are moving from particularly Mauritius and as well as in Cayman to India. So here they don't see that because you are already part of India, you're sitting in India. So the tax uncertainty is no more there.
There. So India's profit is someone's loss.
Yeah.
Anyway, that's good. What type of people should consider investing through Gift City?
So it is for everyone. So anyone who wants to invest it today, as of now, okay, there is two differences. One is that currently we can set up funds in two forms. One is that in the form of AF, another is in the form of retail schemes, like a normal mutual fund schemes. Okay. For a AF, the minimum investment is $150,000. Okay, for any fund.
$150,000.
$150,000. Yes. Okay. So as on date, retail schemes has not been launched by anyone because there was some, some clarity was expected from income tax department. It was not clear. Hence, nobody has launched a retail scheme, but we all have launched an AF kind of a structures here. The minimum investment is $150,000. So that is what is probably filter out some of those retail investors who wants to invest. But maybe in the days to come, yes, we will all be launching those retail schemes also. But currently, whoever can invest that $150,000 and above in a single investment, because it is again, it cannot be broken into 2 or 3 installments or through 2 or 3 different schemes. It is a single scheme, 2 or 3, one single investment which they have to make $150,000.
So one shot payment you
one
need.
shot payment has to be done. So that is the one. So it's then definitely it's open for anyone, resident, non-resident Indians. They can invest. Non-resident entities, any corporates, trusts, family trusts can invest in these funds. Any foreign national also can invest, because directly in a mutual fund, foreign nationals cannot invest. There is no provision for them. But whereas foreign nationals can invest in this fund, foreign entities can invest. Foreign entities, if they have to invest in India, they have to register with SEBI as an FPI and do all those compliances. But when they're coming through me, they don't need to do register as an FPI, and hence it is easy for them to invest. So there's a whole benefit of documentation, whole benefit of convenience in terms of investment is available. So any foreign NRIs and foreign any country, excluding FATF blacklisted country or a non-compliant country, rest all countries, people from all countries can invest into India.
Any kind of non-resident can invest.
Yes.
Do they allow tourists inside the Gift City to look into it?
Yes. So actually, people, it's a free zone, that it is just a people can visit Gift City if they are. I definitely suggest that each of the anyone who is traveling to Ahmedabad, Gandhinagar or something, so should visit this Gift City. So yeah, it's a good. Probably that we have heard about various governments talking about smart city. We have to set up smart city near Bangalore, smart city near here and all, but we have not seen that how the smart city is there. But I think here in Gift City, you can really see what a smart city means, and maybe you could, that can also be a good investment opportunity for you if there is something. So.
Good. And right now, in particular about your offering. So you have launched a feeder fund, which is in Aditya Birla Sun Life Flexi Cap Fund. This dollar-denominated fund will invest. Am I right?
Right. Yes. Correct.
Okay. That fund will
directly. The entire funds, whatever we receive, on the same day we will invest in an India Flexi Cap, domestic Flexi Cap mutual fund scheme. Because we also selected this Flexi Cap mutual fund scheme is that because it gives lots of the investor doesn't need to time the market or to move the money from large to mid to small or any of these things. And since there is the entry ticket size is also higher, the splitting and allocating the funds between these schemes are a little difficult. And hence we have done a Flexi Cap, because here the fund manager chose to do that, allocations between large, mid and small basis the market valuations. And this Flexi Cap fund is also, for us, it's one of the oldest fund. It has got a 26 years of track record. Size has been very good. It has got about 25,000 crores of AUM, and performance has also been good. Since inception, performance is about 20 to 23% of CAGR. So hence we have chosen this fund to do to give an good investment experience to our non-resident investors here.
But the money has to come through only in dollar terms.
Yeah, we have denominated our fund in dollars. So, and hence all the investors, whichever their currency or country they may be, but they have to convert and give it to us in dollar.
In American
And
dollar.
In American dollar, US dollars. Yes.
US dollars. They have to, even a Singapore person has to convert and then send to you in
Correct.
American dollar terms.
Currency. Yes.
So that really is okay. You have mentioned the minimum is $150,000.
Yeah.
Is there any upside maximum you have kept?
No maximum limits. No.
No, any amount can be.
Yeah. Even after that also for withdrawal, repatriation also there is no any limits are there. How much ever they've invested, they can take everything along with the gains, no questions asked.
Okay. So now, what type of risk this investment has for any new investor?
So as this is being an equity investor, equity scheme, so the equity market risk is always there for all the investors here. So the volatility of equity market, and again, particularly only towards the domestic India, because it's an India dedicated fund. So whatever be the risk with respect to India, we could see it all there. But thankfully that, as of now, political risk is not there. We have a very stable government. Geopolitical relationships are very good. So market, actually the India has been one of the fastest growing economy in the world. So thereby, I think most of that are all well placed. India is well placed in the global economy. The macros are very good. But however, that if you have to really look at, yes, equity market risk is always there. Second risk comes from a global investor perspective is the India historically has been depreciating against dollar anywhere in the range of 1 to 3%. So last 1 year, India currency INR has depreciated by 1% against the dollar. So that would be having a kind of impact on their investment also. If going forward next 1 to 3 years, India continues to depreciate, and India, I think, being the kind of it has been there, there will continue to be a INR depreciates against dollar because dollar is continue to be a reserve currency, and so that is another risk which investor has to face.
So broadly, there are two risks. One is market risk. India market goes up, their investment goes up in the long term. In the short term, it may go down, so their investment levels might go down. And then the currency risk associated with the dollar investment, rupee dollar conversion. So these are the two major risks. And
two major risks, but sometimes, sir, the rupee risk is also gets adjusted against their thing, because they are also again from their local currency they are converting into dollars. So if their local currency is also depreciating against the dollar, tomorrow when you're converting your money back from dollar to your own respective currency, when they're waiting, it gets mitigated. So more or less, though the risk is there, it might get mitigated to some extent because of your currency is not a thing. But this risk will always applicable for US people who always hold the money in dollar only. For all the other people, there is some mitigation also is possible.
And you accept only cash in the sense of wire transfers. Will you accept any portfolio, someone transferring stock portfolio?
No, sir. Since it is all fund, it is not a PMS kind of a structure. It is a proper separate funds. So it is only the investment has to happen only in money terms,
so
dollar terms.
Wire transfer it has to come. And will you give, just I'm asking a question which people used to ask me 10 years before for mutual funds. Will you give any policy certificate?
Yeah, there is a statement of account will be sent, like the way the mutual fund statements are given. So once the money is received here and we allot the units, an allotment statement will go to the investors. And after that, on every monthly basis, we share that statements with updated statement with them. So they will have all these details available on a regular basis.
Okay. So there are no policy certificates, rather like regular mutual fund.
More of statements, yes.
Yeah. Good. What kind of documents generally you look for from investors?
Sir, here the subscription documents are two. One is application form and second is contribution agreement, which the investor has to sign, which which I will be providing, which they need to fill it up and sign. From their side, we need a certified copies of address proof and identity proof. So that is the only documents which is required. Address
proof and ID proof certified by someone, notary or someone. Am I right?
Yeah, right. Equivalent people who are there, either banker or any of these people can not.
You want that certification. Yes. So it's as simple as that.
Right. True.
Okay. And you mentioned that it cannot be done in installments. Am I right? Only one shot investment.
Yeah.
Probably, I would love to see a $500 SIP every month.
And further, yeah, once they invest the initial investment of $150,000, further subscription in the amount of 25,000 and above is always allowed. So anytime, it's not just once you do and come stop, leave it. After that, you can keep. You want to add up further onto that, you can add up further onto that with a minimum of $25,000.
$25,000. Okay. And for sure, you will not deduct taxes at source.
Yes, yes. Because see, that's what actually, if you look at, there is a section 10(4)(d) of the Income Tax Act, ensures that the fund for whatever the buying and selling we do of other than equity shares, so there is no tax applicable for that. So it's not just that some ambiguity is there. It is a clear-cut defined in Income Tax Act, like the way in mutual funds we have 1023(d), which defines that whatever income you get on this 1023 is exempted from tax. Like the way here also 1040 defines that it is exempted from tax.
Okay. Yesterday, when I sent this message that I'm going to have a live show with you, one of my investors from Coimbatore told, I do have money in US. He is exporting. So how to invest that money in this, in dollar terms? Is there a way?
Sir, actually, if the resident Indian is having a company and the company is having money and to invest via this, it is possible. But however, since if he is the UBO, ultimate beneficial owner of the company, then we would like to look at two documents. One is that tax residency certificate, because the investment would happen from a company name, not an individual name. And company is registered outside India if it is a foreign entity. Then we need to see if their tax residency certificate is outside India, then they can invest. And second point is that I mentioned you that in the earlier discussion, place of effective management. If they can give me a declaration that the place of effective management is outside India, then we can take the money. Because otherwise, if these two are not there, then he will be treated as a resident Indian, and resident Indians cannot invest outside and bring back the money through this fund. It will be amount to round tripping.
Okay. So as long as his company is overseas and it is tax paying company overseas,
yes,
and effective management is done in overseas, they can invest into your fund.
Yes.
Okay. That's very clear. And what is the return? Whenever generally we tell people, they ask how much I can get. 1 week before, a person came and they asked me, can you give me, that investor is well known. I mean, he or she is a do-it-yourself person. They were asking me, can you make 30% per annum? We can offer you 12%. We can tell that, we can expect 12% per annum, or max little higher risk 15% per annum. No, I'm seeing in the last 1 year, Indian market has given 30%, 40%, 50%, and in the last 2 years it has given. So always this return expectation is there. This is to keep to give an understanding. No one, I know that we can't guarantee any of these investments.
Right.
But what could be a expected return, keeping a horizon of 5 years in dollar terms?
Okay. I think the India market's performance for last 2-3 years has spoiled the thought process of investors. Their expectations have gone up significantly. But however, sir, when someone is looking at investing in equities, generally that this is the kind of thumb rule which we look at, is that what rate your India is growing, your economy is growing. So today, if my India is growing about 7%, then what is my inflation? So that inflation, if assuming that it's about average about 5 to 6%. So even if I take 5%, so 7 plus 5 is at 12%. So the market should deliver the returns about 12% historic. So this is how that a thumb rule and what we look at, what is the kind of returns which we can expect in a market. Then you come to a fund. This is a market is about 12%. Then we come to the fund. Historically, when we see if FlexiCap kind of a fund is always outperforming their benchmark with about 4 to 5% or 6% kind of a range, and maybe leaving that the short-term thing where it even doubled or higher than that kind of thing. But on an average in a long term, it has been outperforming the market about 4 to 5%. So if that is the kind of expectations we can continue have, then about 12% plus another 4 to 5% outperformance, which fund manager will bring in through his active selection of stocks. So that could be like about 17 on an average. So 16, 17% kind of a returns, or anywhere between 15 to 17, even after adjusting the expenses and all that. So it would be an good expectation
Even
one
if
can
we
have.
leave it for dollar depreciation, 2-3%, probably 12-13% in dollar terms, they may be able to get over a period of 5 years.
Yes, easily. That's a minimum someone can expect that.
Yeah, this is not guaranteed, but an expectation.
Yes, right.
To have an idea. So, and what would you suggest as the minimum holding period for this, inward fund, India bound fund?
Sir, India has now structurally been in a very, very stable market, a stable economy. Till they see that, I think this growth opportunity continues, this GDP growth, if they continue to grow at 6-7%, I think I don't see that why investors should withdraw money from there, unless otherwise they have a money requirements. So I think that historically we see it can be an one permanent allocation for them, and that in a flexi cap where they don't need to do the changes of allocation, and the fund managers are going to choose. And historically, the last 20-25 years performance is so good. Then I would suggest that it should be a permanent allocation in their portfolio and should only redeem as and when they need money for any of their personal use.
So a minimum holding period of 5 years, can we say?
Is definitely, anywhere 3 to 5 years is a good investment minimum period.
One more question. After that, we will go to Q&A session. So like you mentioned that you have two types of funds. One is for NRIs, overseas citizens, foreign citizens to invest in India. And then the other type is Indian citizens, Indian residents, I would put it, Indian residents to invest elsewhere, overseas, So that also you accept with minimum 1 crore tag. Am I right?
Yeah, same $150,000.
But that will be in emerging markets or in overseas market and all those things.
Right.
So when they redeem the money, the Indian residents, when they redeem the money from AIF, your fund, do they have to pay any taxes in India?
Yeah, because all this gains, it's earned by the Indian citizens. So there is a taxation of 12.5% long-term capital gain tax. In all this fund, we have also structured in such a way that there is no short-term capital gains arise for the investors. It's only long-term capital gains. So it will be, they have to pay the tax at the rate of 12.5% plus surcharge and cess.
On their own.
Yes, on their own. So there are two funds. One is in category 2 and category 3. In a category 3 fund, we have, it will be paid at the fund level. But the income which they receive after the tax, it is exempted from tax. They don't need to pay. It's already paid. Tax paid income. So another is a category 2 fund where, we will only do the TDS portion and rest of the tax is to be paid by the, investor.
Okay. Then that way that is good. And that's all from my side. Probably we will take 5 to 10 minutes. And
Sure,
as
sir.
I said, probably we will try to finish sharp by 12. And let me see if there are some questions. There may be a lot of NRIs who are participating in this. Good morning. Narayanan, yes. Ireland-based US fund pay lesser tax than one from the US. I could not understand his question. If you can.
Ireland fund investing
what he's saying is Ireland-based US fund pay lesser tax than one from the US. So like there is a US fund and there is an US fund managed in Ireland. So he is asking tax difference. If you are aware of it, you can tell. Otherwise, we can leave it.
So even Ireland fund also, when if an investor invests in that Ireland fund, the income at the Ireland there is no tax. They don't do any tax deduction at source the way that we are doing it here. Okay. But once the income is taken back to your US, you have to pay the tax there.
Okay. In the country of residence, they may have to pay. Dharmaraj Tayyappan. Is it possible to share past history of any investor's profit who invested 150K USD?
See, we have a fund now because, as you know, that in IFSC location has been operational only for the last 2-3 years, because though it started off in 2020, from the time that funds have started setting up and then operated, it's only about 2 to 3 years of experience. So I have one fund which is about 1 year old. That is a global emerging market fund, which has been open since 1 year, last 1 year. It's been given a good returns of about 20-22% in the last 1 year. So, however, that for the resident Indians who are taking the money out, so they also get those dollar benefits also, because this 22% return is in the dollars. As I mentioned, the last 1 year itself, we have seen a 1% depreciation. Maybe before that, maybe another 1 or 2% depreciation would be there. So that is how that there would be an additional returns which the Indian gets. But when you're looking at it from a foreign perspective, India market has given in the last 2 years. There would be many funds which would be there, but I don't have any track record. I don't have a funds, but there are many funds who are there who has generated the similar 25-30% returns per annum in the last 2 to 3 years. But again, if you see that dollar depreciation of 2 to 3% is the only loss which you have to incur from that, and rest all the gains is passed on to you. Yeah.
Okay. So, I mean, IFSC itself is a new concept, so you guys are coming into it, but in the past, the history funds have given good return.
Yeah.
What you are mentioning.
See, it's whatever the India returns, we can take that, and only we have to remove that dollar depreciation into that if the US people are investing. That's it.
Okay.
And the dollar has been depreciating only in the range of about 2.5 to 3% for the last 5 years or so.
Okay. Yeah.
On an average.
Minimal comparatively.
Yeah.
Then there is rupee MFS. What should we do once investor is ready to invest? How we should approach you? Probably, I mean, we are one of the distributors for Birla Mutual Fund. So you can approach us. You can call us. Probably this in the description box and elsewhere we will give you our numbers. If you yourself are a financial advisor or distributor and would like to distribute the product, probably you can directly be in touch with Sudhir and team and Birla Mutual Fund team in Tamil Nadu, in Chennai, wherever it is. That is only Vimal. Vimal, he is asking how much expense ratio?
I didn't get it. How much?
Expense ratio. How much is the expense ratio?
Expense ratio of the fund is 1.3%. Starting with the highest expense ratio of the fund is 1.3. The total expense ratio here. And this underlying fund, master fund, will have another 80 basis points of total expense ratio, because we'll be feeding this fund into a direct plan of FlexiCap fund in domestic market, which has an expense ratio of 80 basis points. And then we will be additionally have a fund management expense of about 1.3%, which will be charging here. So totally it would be about 2.1%.
Okay, good. And then topic to return and this topic to return, thanks to Praklaval and Birla Mutual Fund. Can an NRI transfer the money from their local NRO bank account to this fund in GIFT City?
NRO, they can do it, but provided they have that repatriable limits, which is there. But again, it has to be invested in dollars only, not in rupees. So hence that if they have the limits of conversion and repatriation to that extent, yes, they can do it. But otherwise, NRI, so definitely they can use, and they can also use their foreign currency accounts.
Okay. So NRIs can transfer money from their NRO account, provided that liberalized remittance scheme or whatever that limit is there, which is $250,000. Am I right?
So even for them, that for NROs, they would be having some limits are available basis the what kind of a income which they have into which they have come to that NRO account. Basis they will have certain limits. So if that limit is there, they can
do it. The thing
is because NRO remittance from NRO or the repatriation from NRO account are restricted with certain limits, but NRE account is free. So
no. Sometimes what happens is, we also face this problem. Sometimes what happens is, fortunately, I mean, knowingly, unknowingly, they transfer money from NRE to NRO for purchase of something. They think that I have to put it in NRO. Then when they contact us, then we tell them, probably you approach your auditor and inform them and tell give the source of funds, how did it came, because it came from foreign country, get a certification, and then from there you can convert. So sometimes people do that. So if that is the case, I think they should be able to do it after getting certificate from their auditor, because bank will ask a certificate. So
Right.
that is it. Then another from Dharmaraj. Is there any locking period set up? Lock-in period.
Lock-in period is only we have just kept it 3 months because there is some exit load there in the domestic mutual fund. So just to ensure that there is no loss which gets evolved for everyone, because this is since it is a pooled fund, all the either gains or losses gets distributed across all the investors. So 3 months, first 3 months only there is a lock-in. After that, for the next 9 months there is an exit load. So after 1 year there is nothing, free to exit anytime.
Okay. So post 1 year they can freely withdraw,
Yes.
provided if the fund is also in positive correct. And then today as NRA, I'm investing in USD. After 10 years, I will lose NRA status. If settled in India, should I need to pay tax if redeemed that particular time?
Yes. So if the till they are see, we also take their currencies, the tax declarations, whether they continue to be an NRI when they are withdrawing the fund. Because if they are continue to NRI, then there is no tax deduction at source. Otherwise, the taxation, the investor has to pay the tax if he becomes a resident Indian. So the best way to do that, if he is going to become if he knows that he is a resident Indian, so before that he takes the gains outside and reports there, and then he can plan his investment further.
He can repatriate to India so that he is tax free. That's a good
Right.
idea. So, because anyway they plan 6 months, 1 year ahead that they are going to move to India. So at that point of time, let them withdraw. It goes back to their country, and from there, when it comes, it becomes tax free. That is good. And then NRIs from EAE will get the double taxation benefits if they need invest category 2. Daniel is asking, NRIs from United Arab Emirates will get double taxation benefits if they invest in category 2.
Yeah. So see here, category 2 mutual funds, basically there is no taxation at the fund level. Everything is passed through and it is taxed at the investor level only. So hence that I think he is asking in the category 2. Yes, category 2 funds are basically closed-ended funds. Where your money gets locked in for some time. Whereas here you have a category 3 funds. Here also there is no tax in your hands. It's an open-ended fund. So it is here also that there is no double taxation. Avoidance is there because it's a by law. It's already exempted. It's a tax neutral place. So you're free to invest here and take them, withdraw them as and when required without need to provide any taxation or prove that you are from, you don't need to prove it through any documents and all that.
Yeah, we need not to. So it's very plain and simple.
Yeah.
Ashok is asking can you please explain if anyone wants to invest, what is the procedure, like any separate documents needed, one has to be in India, the flow of client wants to do. I think, probably we tried for one more client in a different fund house. So at that point of time, everything can be done online. Am I right?
No, sir. See, everything online means, particularly from an NRI perspective, no, now the IFSCA is not accepting that online documents or online thing, because when the online onboarding or digital onboarding, the IP address gets captured. So then these people beyond our India, that we don't have access to verify or do that on the IP addresses. So hence currently, because of the data security and various things, they are not allowing. But what we are doing is that the investor can send the scanned copy of their application form and the documents to us. So basis that we do verification of all the documents, and if everything is perfect, we'll ask the investor to transfer the money, and we will allot the units and complete the transaction also. And the investor can courier the application later, which can reach us by 15-20 days later also.
So the point is physical presence is not needed.
Physical presence is not needed, but physical documents are required. But where again, we will take something on the scanned copy in the initially, not waiting for the physical documents to be received for investment.
So, that is good. That is good. That way that it is kind of hassle free. In the sense, Gokulam Financial. Please clarify if NRI wants to invest through gift, whether their local address and ID proof is enough, or additional documents required like PAN, Aadhaar, for NRIs, direct and regular mutual fund schemes available.
Yeah, sir, if the NRIs have a PAN, yes, they need to declare the PAN. If they don't have the PAN, they need to just give a declaration that there is no PAN, they don't hold any PANs. So that is there. In addition to that, the identity proof and address proof are the two other documents which they need to provide.
Okay, those are the two documents. Okay, very good. I mean, in today's session particularly, we kept this mainly because, for one is the investor, NRI, foreign citizens, that is one part. The other thing is the financial advisors in India, mutual fund participants in India, they want to also have clarity on this because there is a new area which is developing and people want to get updated. So I'm seeing a lot of, advisors, mutual fund managers and others have also participated in today's, live show. That is the main purpose to, we can share our knowledge, we can, pass the information. Then automatically something will come, people will be interested when they know, when they are very, when they get clarity, automatically people will, will be coming to you. And anyway, thanks for participating today. It was great and nice talking to you. It is 12:02 and we are finishing it.
Thank you, sir. Thanks a lot once again for inviting me to this event and giving me this platform to share my knowledge and our understanding and our offering. So we hope we'll always be there. If you need further any inputs and any assistance, please feel free to reach out.
Sure. Best wishes for your new offering and all the best.
Thanks a lot, sir. Thank you all.
Drop by when you are in Chennai.
Definitely, we'll do it, sir.
Thank you, Sudhir. Yeah, bye.
Thank you, sir. Thank you.